Agency purchase loans become riskier, and the Fed sets a deadline for affected borrowers to claim relief funds from a foreclosure settlement. Ahead on Monday's News Wrap. Agency purchase loans become even riskier overall in October, driven by an increasing shift in originations from banks to non-banks, according to data released by American Enterprise Institute's International Center on Housing Risk on Friday. The composite National Mortgage Risk Index for agency purchase loans rose by 0.76 percentage points year over year in October, up to 12.14%, and has now increased year over year every month since January 2015. The increase in agency loan riskiness has been largely driven by the migration in originations from banks to non-banks. Since non-bank lending is substantially riskier than lending from large banks, about 70% of first-time buyers in October had down payments of 5% or less, and more than 1/4 had debt-to-income ratios higher than qualified mortgage limit of 43%, suggesting that credit access is not tight for first-time buyers. The Federal Reserve has announced that borrowers who do not claim the funds owed to them by the independent foreclosure review by a certain date will forfeit that money, and it will be redistributed to eligible borrowers who have already cashed or deposited IFR relief checks. The deadline is December 31st, 2015 for borrowers of the servicers regulated by the Fed who have not cashed or deposited their original checks to request a replacement check. The deadline of cashing or depositing these checks is March 31st, 2015. Unclaimed funds will be distributed to borrowers who have already cashed or deposited their original checks. You can check out these stories on the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again on Tuesday. Until then, stay with DSNews.com for all of your most relevant default servicing news.